Hello, my name is Solomon. Welcome to traderflexzy. In this video, we will learn about the spot market terminologies used in trading the market. Before we start, I need a favor from you. Please like this video and subscribe to the channel. Okay, thanks for the favor. Let's start. There are two types of spot forex accounts, which are the cash account, the margin account. What are the difference? The cash account is the normal account you own at your commercial banks. The margin account is used for speculative trading with generous leverage, although leverage can be scary. What is lot? Lots are specific amounts of a currency you want to buy or sell. Basically, your amount of units you want to trade. What is Peep? The basic finance definition of Peep is price in points or price in percentage. It shows you the amount of price change in the exchange rate of a currency. What is bid and ask price? The bid price is the amount a buyer is willing to buy from you, and the ask price is the amount a seller is willing to sell to you. What is spread? Spread is the commission charged by a market maker. Example, broker's commission after every trade you place through your brokerage account. What is gap? Gap are areas where price moves sharply as a result of little or no orders there. It results to an empty space between the charts. What is swap? Forex swaps are interest you earn or pay for overnight positions. Thanks for watching. Don't forget to like and subscribe to the channel to know when I post part 2.